Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today I would be discussing regarding the trends, the setups, the technical indicators and candlestick patterns on Nifty, Bank Nifty as well as on the different asset classes. Now first of all let us discuss what we have mentioned in our last video. In our last video we have mentioned that due to the union budget we might see extensive volatility coming into the markets because uh, markets are waiting for a clear direction because it has been hammered down significantly in the last couple of days and it was into oversold territory. So we might see some sort of pullback from the lower levels, but pullback would be seen only if there is something great coming into the budget. So after the budget, I mean to say during the budget hours, when as and when the budget passed, the good news came in and market took it that particular news in a positive manner, and Nifty started rallying, and throughout the week, it ended on a positive note. So as we have mentioned that the strategy for this that last week should be buy on dips and market exactly behave in our expected manner or in our expected lines. So definitely looking at the Friday's close, we feel the momentum is still bullish, and from here also we might see Nifty slowly and gradually inching higher from these current levels. So friends, now let us go to the daily charts of the Nifty and we'll try to analyze the charts and try to figure out what could be the trend for the next week. Now friends, this is the Nifty daily charts. You can see in the last two months we have seen that Nifty has been consolidating, or some kind of time correction was also seen, some sort of price correction was also seen, but you can see the price damage was not that much severe. It has been moving into a downward falling channel, making low tops, low bottoms, but as I said, last week was highly volatile. You can see this particular candle and it has ended on a positive note. Now here on RSI also you can see, which is the momentum indicator, it has given a positive. You can clearly see a positive cut from at the midway of its particular band. So definitely the momentum is still positive in the markets. And looking at this pattern, we feel that any correction should be used as a buying opportunity, and sooner or later we will see Nifty breaking out from this falling channel. So Nifty is on a verge of a breakout from these levels, and any corrections from these levels should be used as a buying opportunity. Now let us go to the Nifty weekly charts. So we will have a little larger picture. On Nifty weekly charts, you can see this is the weekly candle. Now prior to last week, it was a red bearish candle. After that, that means last week we have seen a green bullish candle. Now this is which what we called as a piercing candle. Piercing candles means it has already entered or traveled or pierced into its previous week's candle more than 50% of that particular downfall, which clearly indicates that the momentum is strong at the lower levels, and any dip from this level should be seen as a buying opportunity. So now let us go to the Nifty daily charts and let us discuss the important supports and resistance level for the Nifty for the next week. So important support in the Nifty for the next week is placed at 17,645 is 54 is the first support. Below that, the second support is placed at 17,555 and third support is placed at 17,353. Now on the upside, the first resistance is around 18,018. 18,000, which is the psychological mark, and if it breaks, then we might see the extension of rally. Above 18,018, second resistance in Nifty is around 18,201. And above that, the third resistance is around 18,318. So these are the important supports and resistance level in Nifty. Traders should try to just watch out these levels and trade in the direction of the primary trend of the market for the week. Now, friends, let us discuss the derivative data of Nifty. In derivative data of Nifty, we'll try to analyze the option data of Nifty and try to figure out what could be the strong support and strong resistance for Nifty for the next week. Now, this is the Nifty call data. You can see the action was seen in 17,900 calls, 18,000 calls, 18,100 calls, and 18,200 calls. Now here you can see there was a rise in the open interest, there is a rise in the volumes, implied volatility is in comfort zone, it is low. Low implied volatility means the market might see a directional trend that is upside from these levels. And again in percentage change also you can see there was slightly positive percentage change in the option premium. Now, looking at this particular volumes, we feel that on the upside, immediate basis, 17,900 and 18,000, which is a psychological mark, could act as a major resistance. Once it breaks 18,000, then Nifty will be poised to rally towards the level of 18,200 and up to certain level 18,300 also. So, looking at this data, the data is comfortable from the bullish perspective. Any dips should be used as a buying opportunity. Now, friends, let us discuss what we have observed in Nifty puts. You will see on the screen in Nifty puts, the action was seen in 17,700 puts, then 17,600 puts, 17,500 puts, and 17,400 puts. Now, here also you can see rise in volumes, rise in the open interest, implied volatility is slightly higher. It is between 15.2 to 17.06. But most important thing which I would like to emphasize is that there has been a significant drop in Nifty put premium. Now this drop in the Nifty out of the money puts is clearly indicating that the smart money has already started writing out of the money puts, which will propel Nifty from these level towards the upside or towards the level of 18,000, and if it sustains then 18,200 mark. So definitely looking at this the derivative data of Nifty, we feel that any dips should be used as a buying opportunity from the current levels. Now, looking at this particular option data, we feel that on the downside, 17,600 could act as a major support. So, if there is a correction, or if there is a correction towards the level of 17,700, one can buy Nifty for an upside target of 18,000 in short term, or at least for the next week. So the strategy in the Nifty or the view in the markets is bullish. Any dips should be used as a buying opportunity. Now, friends, let us discuss the charts of Bank Nifty. In Bank Nifty, you will see. Let me go to the Bank Nifty daily chart. You can clearly see over here similar kind of pattern. Last 2 months, it has been moving into a downward falling channel, making lower tops, lower bottoms. In Bank Nifty, also we have seen that uh, uh, the index has seen some sort of time correction as well as price correction. But in the last 4 to 5 trading session, you can see Bank Nifty has taken a support 2 times, and from there it has bounced sharply from the lower levels. So this support trend line could act as a major support at least for the next 1 or 2 months, until and unless Bank Nifty sustains above 39,400. The trend would remain bullish from the current levels also. Now you can see RSI. RSI is also positive in the comfortable area. So the momentum indicators is also bullish at these levels. Now let us go to the Bank Nifty weekly charts. In Bank Nifty weekly charts, also you can see last week was a green candle, green bullish candle. Prior to last week, the candle was red, and again last week candle is considered as a piercing candle, which indicates that the Bank Nifty prices have already entered more than 50% of the downfall of its previous week. So this purely piercing candle clearly indicates that the momentum at the lower level is very strong, and there is the strong support seen at the lower levels. So again, the view is bullish. Sooner or later, Bank Nifty will also break out from this particular falling channel. At least we are expecting in next maybe 2 weeks, Bank Nifty might break out from this channel. So friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. In Bank Nifty, the first support is placed at 41,195. Second support is placed at 40,977, and third support is placed at 40,148. On the upside, the first resistance is placed at 42,015. If it breaks, then second resistance is around 42,343, and third resistance is around 42,733. So these are the important supports and resistance level in Bank Nifty. Traders should just try to follow these levels and trade accordingly in the direction of the primary trend. Now, friends, let us discuss the derivative data of Bank Nifty. I will try to figure out, or will try to analyze what could be the area which would be acting as a major support on the downside and major resistance on the upside. Now, this is the Bank Nifty call option data. You can see the action was seen in 41,600 calls, then 42,000 calls, then 42,500 calls. Now here you can see there has been rise in the open interest, rise in the volumes. Implied volatility is also slightly higher, but still it is in the comfort zone. It is between 16.60 and 17.91. The option premium prices are also in positive territory. So looking at this particular data, we feel that the momentum still remains positive. Smart money have also tried to build long positions in Bank Nifty out of the money calls. Now on immediate basis, looking at this particular data, we feel that 42,000 could act as a major resistance. If it breaks, then Bank Nifty can test the levels of 42,500 on the upside. But the momentum remains to be positive looking at this data, and any corrections should be a buying opportunity at the lower levels. Now, friends, let us discuss a Bank Nifty put option. You will see on the screen in Bank Nifty put option, the action was seen in 41,200 puts, 41,000 puts, and 40,500 puts. Now here you can see there has been a rise in the open interest, there has been a rise in the volumes. Implied volatility has already entered into slightly danger zone. It is between 20.30 to 22.37. Uh, and again, in option premium, you can see there has been a significant drop in this particular option premium. So again, at the lower levels, or again at the lower strike price, we can see that in the out of the money strike price in the Bank Nifty puts, smart money has already started writing heavily this particular put strikes. So this might propel Bank Nifty on the upside from the current levels. But looking at this implied volatility, minor cool off or a minor correction cannot be ruled out. But that correction should be used as a buying opportunity at the lower levels. So, friends, overall looking at to the charts, uh, overall looking at the charts and candles, we feel that in the markets, any dips should be used as a buying opportunity. Nifty and Bank Nifty are on the verge of a breakout of this particular falling channel, which we have discussed on the daily charts of Nifty and Bank Nifty. So again, as I said, market view is bullish, momentum is positive. Any dips should be used as a buying opportunity. So, friends, let us come to the final segment of our show, which is positional call. I've identified one stock from midcaps segment. The name of the stock is ASTRAL. Uh, Let me go to the daily charts. Now you can see this is the chart of ASTRAL. The stock has corrected from the levels of 2600, and it has corrected uh, and taken a support around 1864. So it has almost corrected significantly from its high, almost lifetime high. It has corrected uh, very well from those particular highs. Now let me show what kind of pattern has been seen in Astral daily charts. We have seen that Astral has formed a minor triangular pattern. Now here you can see the price volume action. The stock has formed a triangular pattern. It is on the verge of a breakout. You can see rising volumes, but prices not going anywhere. They are consolidating and prices are going high. RSI, when prices were making lows, RSI is indicating slightly positive divergence. The price, volume, and momentum indicators are clearly indicating that stock is on the verge of a breakout, and we might see a sharp rally or a decent rally from the current levels for the long term perspective. So, long term investors, positional traders can buy the stock or accumulate the stock in the range of 2053, which is the current market price, and on corrections to 2010 for an upside target of 2300 in long run. If the momentum is very sharp, this target might come earlier, maybe next 4 to 5 months. But looking at this pattern, the stock has potential to give very good returns in long term also. So as I said, long term investors as well as positional traders can buy the stock in the range of 2053 and on corrections to 210 for an upside target of 2300. So, friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.